to this webinar of the Evolve UK series. My name is Deirdre McPartlin. I am the manager of the UK team within Enterprise Ireland. We have all of you in the audience on mute, but you can ask questions over the question function. And we will also, at the end of this webinar, we will be emailing you both the slides and the recordings. And if we see there's a huge volume of questions, we'll pick some of them now and we'll have a log of the other questions and come back with the frequently asked questions and responses from our panelists. So this webinar looks at two issues and really addresses, I suppose, the issues that we believe Irish exporters will have in their minds. So, you know, I think it's all clear to us at this stage that exporting has two elements. You export from Ireland, but then there's an importing piece into the UK. So I'm delighted that we have our panelists here today. And if we can just flick on to the next slide, I can introduce them all. So we have Margaret Whitby, who leads the EU member states engagement team within the Border and Protocol Delivery Group in the Cabinet Office. You're very welcome, Margaret. On the phone, we have Claire Wilson, who leads the Stakeholder Engagement Group within the Customs and Border Design Group in HMRC. You're very welcome, Claire.
Hi, everybody.
You're very welcome. So the first half of this, Margaret and Claire will talk us through the rules and changes that are taking shape at the end of the transition period on the 31st of December. So from the 1st of January, what rules and regulations are in place. And after their slides, we'll pause and take some questions based on the procedures and that rules piece. We'll then move on to our panelists for the second part, and the second part deals with all of the rules and regulations that have been described. What implications does that have from a business and commercial perspective? And I'm delighted that Jerry Collins, a very good friend of Enterprise Ireland, managing partner in ECOVIS, is joining us. He's about 13 years experience helping Irish companies set up a presence here in the UK. Thank you, Jerry. And he's brought along his partner, Ruth Potter, who is a tax partner in ECOVIS.
Hi.
And we'll have questions at the end as well on the areas that they address. So without further ado, Margaret, I will hand over to you.
Can you hear me? Can you hear me, Deirdre? Sorry,
yes.
My Wi-Fi may be having trouble.
No, we can hear you, Margaret. We might switch off your camera. That might help.
Hello, Deirdre, can you hear me?
Yes, yes, we can hear you.
Yes, thank you. I'll carry on talking. I'm afraid I can't hear you, everybody, but good afternoon. My name is Margaret Whitby, and I'm from the Border and Protocol Delivery Group. We are a cross-government body based in the Cabinet Office now, and we work with departments across UK government to bring everything together at the border from day one. And I'm delighted to be joined today by Claire Wilson from HMRC, who's going to talk us through the requirements and the customs requirements from that point of view. But just before we get to Claire's more interesting slides, I'll just give you a little bit of an overview. And Jack, if we could have the next slide, please. Thank you. So I think everybody on this call will be aware that on the 1st of January 2021, the transition period will end and the UK becomes a third country for member states of the EU. So that means that the free movement of goods between the UK and countries in the EU ends. Controls will be placed on the movements of goods between Great Britain and the EU, including Ireland, of course, And those controls will be in place whether we agree a free trade deal or not. So there are a number of controls and things that will come into play no matter what agreement is reached. And we are aware, and we need to get that message out that preparations need to be in place to get ready to do customs controls and procedures. But of course, the UK government, as everywhere else, has recognised the impact of coronavirus, and that reduces the ability for businesses to prepare. We know everybody's been focused on other things. So in July, the government announced that we'll be taking a staged approach to introducing controls for UK imports for Great Britain, imports into Great Britain. And those stages will be introduced from January up until July. Claire will talk you through the customs stages, and there's lots of detail, and we'll share links with you later about those changes to the movement of sanitary and phytosanitary goods and so on. There's some nuances there from January, I should say, on to July. Deirdre may have covered in the presentation, but I'm afraid the children are home, so the Wi-Fi is under strain in the Whitby household, so bear with me. But just to be clear, we won't be talking about the Northern Ireland Protocol and movements into and out of Northern Ireland today. We will come back to you, and we will talk to you about those at a later date. Jack, if we could have the next slide, please. And if memory serves, this is a little reminder that there's no such thing as a free lunch, and we'd like to understand your readiness, if that's all right. If those of you who have access to smartphones and other things could go onto Slido and choose #BPDG, I have started a poll for you there, and we'd like to understand a couple of things. So the next slide shows the first question I think that we're going to ask you. If you've got a few moments, we'd be grateful. I suspect the answer will, the majority of you will be answering B here, but just in case, I don't want to lead you, but thank you. Grateful if you could go into Slido and have a look at those questions. Thank you, Jack. The next slide, please. So, as I said, there's going to be significant changes on trade between the EU and Great Britain at the end of the transition period. So on the 1st of January, New Year's Day, customs declarations and other paperwork will be required, depending on the goods you're moving. Those of you who move goods now will know that you need an invoice perhaps, and your ticket for your ferry, or if you're coming on through Great Britain onto the short straits down to use the Channel Tunnel or the ferries from Dover, you'll need to have your tickets for those as well. This all changes from the 1st of January. It will all start with an export declaration in Ireland, and I understand our colleagues in Revenue are building up and providing the information you need for Irish exports, and there are a number of webinars I understand next week, but you'll need to start with an export declaration, and then arriving at the goods or the port, the terminal in Great Britain, you'll need to have import declarations for that. Of course, some of you may be using transit. So businesses will need to comply with customs and other border formalities for moving goods. As I said, just to reiterate, the UK will be taking a phased approach to import declarations. Claire will talk you through the detail of that now in a moment. And there will be a waiver for entry summary declarations for 6 months. That is the otherwise known as the safety and security declarations, and that will apply for imports to GB. The UK will be a member of the Common Transit Convention, so the Common Transit Convention can be used to move goods through the UK from the 1st of January. But just to ram home the point really, from the 1st of January, no more simple formalities. There will be requirements to do declarations, and there could be up to 9 additional procedures depending on your role in the supply chain and the goods that you're moving and the level of pay. So thank you very much to those of you who are looking at the poll. I will now, who've been keeping a close eye on UK Affairs will have noticed that we published the border operating model on the 13th of July 2020. It's a lengthy document. There's a link to it here in the slides, but it can be found on gov.uk. It's about 200 odd pages. It's goods into and out of Great Britain. It will be updated, and that update is due to be published next week. I haven't got a confirmed date yet, but The update will include more information about the infrastructure that will be put in place at UK ports and nearby UK ports. We're building some inland sites. It will update on a number of DEFRA policy areas, that is the policy areas that cover the movement of food and food products and chemicals and so on. We'll be clarifying the level of DEFRA checks from July 2021. That's around the staged introduction of those. Further detail on how you can delay customs declarations will be published in next week's in the update next week. You may have heard of the smart freight service that we are building to manage traffic flows at key ports in the UK, indeed at all ports, and that was called the smart freight service. But as it's going on to gov.uk, it will be formally called the Check HGB is ready to cross the border service. This will be used by hauliers to confirm that if they're coming through GB, for instance, and going on to France or indeed onto Ireland, that they have done the paperwork required to get into the EU. That is, they have done the French import or the Irish import declaration and entry summary declarations. We're building that service now. And for those of you that might be moving goods down through Great Britain, through Kent and out into France and beyond, you will need to make sure that that your hauliers have used that service. Otherwise, they will need that permit to get into Kent, or they may be fined. We'll be refreshing the process maps that are published in the border operating model and adding some further annexes about passenger policies and other requirements. We have included an annex on member state requirements as a guide really for UK importers and exports. It gives a very light overview of the steps you as Irish exporters will be taking to a UK audience, but it might be useful for you, and it certainly points on to some of the port facilities and requirements in France, Netherlands and Belgium and Spain, which may be of use to you. A good starting point. So a lengthy document. There's lots of other detail published, but that's worth having if you get a chance. And if I have audio, if I'm clicking in and out, I haven't seen any messages, so I'll carry on. But I suspect a number of you are aware of this, but we get a lot of questions about Iori numbers, that is economic operator registration and identification numbers. So forgive me if you all know this, but of course a UK importer and exporter will need to have an Iori number issued in the UK from the 1st of January. They will start with a GB. And EU importers and exporters will need to have an Iori number issued by an EU member state to carry out transactions in those. So Irish importers and exporters can get and apply now today for a GB Iori number if you think you're going to need it. If you're going to interact with UK systems, you will need a GB Iori number, and you can apply on gov.uk for those Iori numbers now. General advice, and I know colleagues later in the webinar will be talking about this, but you need to agree your terms and conditions with your UK importer and indeed exporter. And there's a link there to the Chambers of Commerce guides published on Incoterm. It's a free trade agreement, but on the if there is no free trade agreement, these tariffs will be in place, and they can all be found using the tariff tool on gov.uk, and they will be they'll have to be applied to all goods imported to the UK from the 1st of January 2021. Thank you.
Thank you very much, Margaret. Claire, we're moving on to your slides.
Hi everybody. So for a little bit of variety, Margaret couldn't hear you and I can't see you. So I'm entirely reliant on Jack going through the right slides. So Jack, I'll just introduce myself first, sorry. I'm Claire Wilson from HMRC. We are the stakeholder engagement team, and we are out at the moment talking to businesses across the UK and the EU with Margaret and her colleagues about what they need to do from the 1st of January. So Jack, if you would move us on to the first slide, which is called Customs Update, and has some text on it rather than not. And I'm going to assume that's there. Thank you, Jack. So just recapping on some of Margaret's introduction there, So yes, we are moving to full controls from all goods from the 1st of July, but there will be a period of staging. The UK government is doing this to assist BizCap. We are introducing customs requirements over a period of time. The staging applies to non-controlled goods only. So this is goods that are not on the controlled goods list, such as excise goods. And there is a published list, and we've got a hyperlink in there for you to check those. The requirement for safety and security declarations on imports has also waived for 6 months. So this is imports into the UK. And the UK, Margaret mentioned, will join the Common Transit Convention in its own right. Now, Common Transit Convention, for those of you who do not know, allows you to move goods across all member countries of the CTC without paying duties. There is a special process to do that. So, Jack, if you move us on to the next slide. Conscious we've wasted a bit of time there, Jack. I'll just take you through some more detail about the import process for those 6 months where we are staging the requirements. So traders bringing goods from the EU to the UK will still need to declare their goods to customs. And if they are moving them in advance of the crossing through a listed rural port or without existing systems, that does need to be declared in advance. So how are we going to do that? To facilitate that readiness, we are allowing traders to make an entry into their own records. More information on this and how to do that is available through the border operating model and is available through HMRC as well, through gov.uk. But businesses will be required to keep a record of those imports for 6 months, and then after 6 months from the date of import, they will need to submit a supplementary declaration to HMRC. To do that, either they or their agent will need to have a simplified procedure authorization, customs simplified procedure authorization, and if there is duty required, an approved duty deferment account does need to be in place at the point of supplementary declaration. So that is the key easement that we are using for the first 6 months. After that date, that will be removed. If traders are moving controlled goods, and as we've said, there's that list to go to find out if it is a controlled good, then they cannot be moved through that method, and they will need to make a frontier declaration. The declaration can be all of the existing processes that we use for rest of world customs declarations. So that's a full, a simplified, or transit. If we talked about goods coming in via a system sorry, I'm getting awful feedback at my end. If the goods are coming in through a location without systems, so some of those roll-on, roll-off ports, then what they'll need to do is notify HMRC that the goods have been imported. Particularly for controlled goods, they will need to be manually arrived in the HMRC system of Excise Movement and Control system for duty suspended goods by the end of the working day following that physical crossing. So there's a variety of ways to move goods for those 6 months between January and July. We are also not requiring safety and security imports for those 6 months. And Jack, if you move us on to the next slide, which is exports. And just to quickly cover this, so exports, we are moving to full customs controls from the UK moving to the EU. So traders will need to do all of the processes that are required for rest of world. That includes submitting safety and security information. And if they're moving, again, through a non-inventory linked location, then we need that arrived before the goods leave the trader's premises to make their way to the EU. If they are moving through a location with existing inventory systems, then that just follows the standard rest of the world export model. So I'll quickly skip on to what happens from July. So if you move the slides on to full controls from July, please, Jack. So after these 6 months have elapsed, everything will move to rest of world procedures. Traders will need to make full customs declarations, and they can again do that through all of the usual simplified procedures that are available, or they can do full declarations at the point of import. All full safety and security declarations will be required, both import and export. We are working now with border locations to develop how they will be managing goods moving through that location. So some ports will choose to use the temporary storage model. Some will use the new IT system called Goods Vehicle Movement Service, GVMS, to support pre-lodging. And some may use a mixture of both in their model. And that is being worked through now. And we expect more updates on that in the month of October. So if you move us on next, we've got some pretty pictures. And this just walks you through what that Goods Vehicle Movement Service requires and how it will work. At the point of making the declaration, that will generate a goods movement reference for each vehicle from within that Goods Vehicle Movement Service, and the unique ID reference is given to the driver. The driver then uses that throughout the process. From January, that will be for all movements moving through Common Transit Convention, and from July, it will be all movements including standard imports and exports. The GMR is given to the carrier, so that's the port or it's the ferry operator or the rail operator, and that data is sent back through to HMRC systems, allowing us to notify the goods can proceed to progress before they reach the port location. And the next slide, please, Jack, is the exports overview. So this is the other way on. This is goods moving from the UK outwards to the EU. And again, same process. From January, this will apply to any goods moving from the UK to the EU via the Common Transit Convention. And from July, it is for all goods moving out of export through a location that does not have inventory linking. And if you take us on to the next slide, we've got some quick updates here about VAT, Excise and UK Establishment. So in the budget, in the UK budget earlier this year, the government announced that from the 1st of January, postponed VAT accounting will be available to all UK VAT registered businesses, and that does include non-established taxable persons. And that is for goods from all countries, so including from the EU and from rest of world. And postponed accounting allows businesses to account for VAT on the goods they import through that periodic VAT return rather than paying the VAT at the point of import at the border. And there's a lot more information on that available on gov.uk. And for excise, we have covered this. So rest of the world will supply for imports and exports of excise goods moving between the UK and the EU. And the UK will have its own version of the excise movement and control system from January. We've been asked a few questions about UK establishment. So the criteria for being UK established can be found on gov.uk. And there is also a link there for who should register for UK VAT as a non-established taxable person. And there is a threshold for that, but there is no minimum threshold. And I think that's it from me, Jack, and I think it's time to hand back to Margaret.
Thank you, Claire.
Thanks very much, Claire.
I've now updated the poll, so there's a... Thank you, Claire. I've now updated the poll. There's a second poll on there for those of you who are keen Slido users, and then we'll have one final question, which I'll add shortly as to whether or not you found this short presentation from Claire and myself useful. So if you keep an eye on the polls, I'll be very grateful for that. And I think my final slide really just has a, which I think Jack can move on to now, is a list of useful links to gov.uk web pages. There are some very clear guidance published. I think as Claire referred to, that guide at the bottom there to how to import and how to export goods. But there are many other links through on gov.uk, and it's probably worth you're keeping an eye on those and perhaps registering for changes on updates. As I said, we'll be updating the border operating model next week, and we are working with the British Embassy and others to deliver further webinars, and we hope to deliver an industry day in October for Irish audiences, and that will have a sort of a fuller flavour from across government departments. We'll bring our colleagues along from HMRC again and DEFRA and beyond to provide all the detail you could possibly want. And we will build up, of course, and provide more information as soon as we can.
Now, we seem to have lost Deirdre as well. There's a few technical difficulties going on at the moment, but now we'll move on to the second half of the panel. We have Jerry and Ruth from ECOVIS.
Afternoon all, my name is Jerry Collins. I'm the managing partner of ECOVIS Wingrave Yates here in the UK. As background, I've helped for close to 30 years now Irish, US and EU businesses get set up in the UK. I'm joined this afternoon by my tax partner Ruth, who's been working on our international clients with me, and like all of us has been looking at the implication of Brexit that have kind of snuck up on us during this COVID distraction that we have at the moment. ECOVIS Wingrave Yates, we're a general accounting practice, normally based in central London. It seems odd to make that comment at the moment, as we're all working from home. In terms of background, half of our clients are overseas owned. So talking about helping businesses set up in the UK is hugely important to what we do as a practice. So we help pre-market entry, help companies look at their planning, funding and employment questions before they launch into a market, help them set up, and then in a number of cases run the outsourced finance function for them as well. So that's in the UK. Moving on to Europe then, we're part of an international network called ECOVIS, start of our name, and we have representation in 75 countries now. So for any Irish companies looking to expand through the UK back into Europe, we can help in every European destination. Jack, can you do the next slide? And I'm pleased to hand over to Ruth.
Hi, I'm just trying to share my webcam. There we are, there I am. Yeah, so I think Jerry's covered this slide in terms of a bit of background about what we do in London at ECOVIS. So if you can move on to the next slide, Jack, I'm going to talk today to pick up on some of the VAT points of importing into the UK and other practical issues relating to tax and operating in the UK. Depending on the nature of any future trading arrangements between the UK and the EU, it appears likely that acquisitions and dispatches will broadly be abolished for VAT purposes. So goods moving from the EU to the UK will be regarded as imports and will be subject to import VAT. As an aside, also, the distance selling rules are only applicable to EU member states, and therefore distance sales from the EU into the UK may become imports too. I'm not going to talk about the position with regard to Northern Ireland, as it still remains unclear, so it's difficult to plan ahead. However, if the UK government doesn't go ahead and breach the conditions of the Northern Ireland Protocol, it will effectively remain part of the EU for the moment and could be subject to a complicated dual mixed VAT regime, which will, I think, be very complex to operate. But broadly, it will remain part of the EU for supplies of goods and for supplies of services part of the UK. So I'm talking today largely about where the UK customer is unwilling to be the importer of record, and therefore the Irish supplier will then be responsible for the importation of the goods into the UK, and the Irish business may have to register for UK VAT. Non-UK businesses can register for UK VAT as a non-established taxable person with HMRC. They do not need a UK physical presence to register for VAT in the UK. But in order to import, they will require a GB Iori number, which I think was touched upon before, and this can be attained through the gov.uk website and, if necessary, at time of VAT registration. Businesses will need to be established in the UK in order to act as a declarant for customs declarations. And therefore, if it does not want to have a UK presence, it will have to appoint a UK-based customs intermediary to deal with the customs documentation. For the majority of businesses, particularly smaller businesses, they may not have the sufficient internal resources or infrastructure to start dealing with the paperwork associated with submitting these customs declarations. Therefore, they may choose to consider using freight forwarders, logistics companies, or customs agents to handle imports and exports on their behalf. These organisations can help the traders find the information needed to complete the formalities and submit the required declarations. And they may also pay import duties and taxes on behalf of the business for a fee. I've spoken to a number of intermediaries recently, and fees are generally based on the value of the consignment, type of consignment, volume of goods, the different number of commodity codes used, and for example, fees for one truck, one type of goods could cost as little as £30 to a few £100 for the necessary paperwork to be completed for customs. Some hauliers as well will insist that they make all the customs declarations on behalf of the business, as it avoids wasted time at border if mistakes are made in documentation. And this is obviously not a cost, or won't be cost effective for them if this was to happen. Alternatively, a non-UK trader without a UK establishment can appoint a full UK agent to import and supply the goods on their behalf, therefore avoiding the need to register in the UK for VAT at all. The agent has to be resident in the UK and will be treated as importing the supply of goods as the principal. They will take the full responsibility of the necessary customs entries as an importer, pay or defer the VAT, and take delivery of the goods. There are obvious added responsibilities and liabilities for appointing an agent in this manner, and therefore added costs as they're taking on the liability of importation. The next slide, Jack, I'm going to talk about creating a UK presence, which probably will be applicable to sort of larger businesses that have significant imports into the UK. They may decide they want to make the customs declarations themselves. I'm not a customs expert. I deal with VAT and direct taxes, but I know that customs declarations are complicated, and you'll need compatible software with HMRC. And if this route is chosen, the business will need to develop some in-house, well, significant in-house customs expertise. They will need a UK establishment, and an establishment could be the company, having a company in the UK with a UK registered office, or a permanent business establishment, which is a place of business where staff are permanently employed and where the technical resources of the business are always present. Customs operations must be wholly or partly carried out at this permanent business establishment. I mean, they could still decide to appoint an agent or customs broker to complete the paperwork, even if they do decide to go down incorporating a UK subsidiary. What will this entity be doing? One option is that the UK entity may be only involved in that part of dealing with the customs declarations. The Irish business could still negotiate and agree the contracts with the UK customer. The UK entity is merely incorporated to deal with the customs administration and logistics processes. And that way there should be a minimum cost in the UK. It would recharge its expenses to the Irish parent with a small markup, a low risk operation, and therefore a low margin subject to UK direct taxes. Or separately, the UK company could be set up to fully expand into the UK. It could employ staff, set up a physical presence, enter into the commercial contracts with UK customers. Very quickly, on direct tax in the UK, a UK company is subject to UK corporation tax on its profits. The current rate at the moment is 19%. Tax returns are submitted 12 months after the end of the counting period, and tax payable generally 9 months after that end. And as an aside, there is no withholding tax in the UK on dividends paid by a UK subsidiary to an Irish parent company. So there's various choices to think about, and no size fits all. And I think you have to look at every type of business on a case-by-case basis. The next slide, Jack, I'm going to talk about some of the banking options. And we've spoken to a number of banks that have Irish banks and UK banks. And whilst there is no regulations preventing a non-UK business from setting up a UK bank account, anti-money laundering policy can make the process cumbersome, and some banks will just flat out refuse an account for a non-established business. An early point of call should be to your local bank, as they may have a UK presence or corresponding banking relationship in the UK. Some banks will insist on a UK entity, and some will also insist on a UK entity plus a UK resident director. It is possible to set up an account, but options are limited if you're unwilling to set up a legal entity, and therefore the fees may be higher due to the perceived increased risk, and credit facilities are few and far between. HMRC for VAT purposes will only issue direct VAT repayments to UK bank accounts. They will issue cheques to businesses. So one option could be to receive cheques for repayments from HMRC and then cash these in your local bank, although this may incur charges given different currency banking jurisdictions. And I think on the next slide, Jerry is going to run through some of the various options about setting up in the UK and the time frames for doing so.
Okay, thanks, Ruth. So as Ruth said, one size doesn't fit all in terms of everyone out there. So for some of you, setting up a legal entity in the UK may make sense in terms of protecting your market share against UK competition post-Brexit, and that may be a heightened concern. On the positive side, you may be looking to expand, and setting up a legal entity would send a very strong commercial message of market intent. If you have a legal entity in the UK, it'll also be easier to employ UK staff through a UK entity dealing with UK employment legislation. So just looking at the options, like over my 30 years plus dealing with overseas businesses, probably 95% of them set up limited companies, normally 100% owned subsidiaries of the Irish company. Limited company takes 1 to 2 days to set up. It's, as Ruth said, it's fully taxable in the UK, but you have full legal protection for the UK entity, so no legal obligations pass back to the Irish holding company. And as I touched on, it shows commitment to the UK market. Probably 5% of overseas businesses set up partnerships, generally tend to be for financial services sector, where they want to attract, I suppose, big hitters, and it works out better tax-wise to have a partnership structure for high net worth kind of hires. Branches, I haven't set one up in probably 20 odd years. They're complex to set up, to take 1 to 2 months. Legal obligations will still vest with the Irish company, and they don't send a strong message of market intent. So they're very, very rarely used these days. That was a very quick run through. Generally, the answer is if you want to set up an entity, it's 100% subsidiary limited company. Ruth?
Yeah, agreed. And Jack, can you flick on to the next slide? This is just sort of a little summary of the Brexit timeline and some of the key dates that are happening over the next coming year. And down on the left-hand side, sort of a bit of a time frame of how long things take. You know, the first thing you need to do is if you do decide to set up a UK company, that should be the first thing to do. It only takes, as Jerry said, only takes 1 to 2 days to register the company with the Registrar of Companies at Companies House. You can then go ahead and start thinking about setting up a UK bank account, which generally takes 1 to 2 months. Registering a business for VAT takes 2 to 3 weeks, providing HMRC don't request any further queries, which sometimes they do. And obtaining a GB Iori number takes 10 to 15 minutes online and a matter of a week to come through. And it can be done as part of the VAT registration process as well. Some other action points to consider now are start talking to customs intermediaries. HMRC have a list on the website of companies that provide a range of customs services. Check the VAT rates in the UK for the products you are selling, check the tariff codes, perform a risk assessment on your entire company, from the warehouse to the managing director. Where is your company vulnerable? What will need to change? What are your biggest risks, and how can you minimize them? And I think Jerry's going to talk a little bit more on the next slide about how we can help. And I think there's a bit at the end about some free case-by-case specific business advice as well. Thanks.
Okay, so as I touched on at the start, we've 30 years experience of helping businesses set up in the UK. So we can provide a little or a lot of help to an Irish business looking to set up in any guise here. If you're only looking to do the VAT registration, get an Iori number, etc., we can do those, and we can help you with your ongoing VAT compliance and filings here in the UK. If you move on to, as I said, set up a legal entity for various commercial reasons, we can do that. We can deal with all the tax registrations for UK staff. We can run a fully outsourced finance function, doing all accounting, tax, reporting, year-end audits if relevant, so you can concentrate on the operational side of the business. We do a lot of that function for overseas-owned businesses. We can provide ongoing tax advice and planning as you expand your UK presence, and also advise you as to when you have a corporate tax presence here in the UK based on your expanded footprint here in the UK. You may need ongoing VAT advice as your footprint expands here in the UK. And I suppose more important than anything, we can act as a sounding board before market entry, during market entry, and let's be positive, as you expand further in the UK or even want to go into Europe with our network. We can help at all stages. So we have a menu of services from very specific narrow services to an all-encompassing finance function. And I suppose you're going to have to weigh up the costs of setting up a UK entity in comparison to getting a customs agent, etc., etc. So just to give you some broad parameters of our costs, and these are very broad, to provide a VAT service only, in terms of registration and ongoing VAT compliance, you're probably talking about a couple of £1,000 a year max. The fully outsourced finance function, and that'll differ in complexity and volume, size, etc., for a number of businesses. You're probably talking somewhere between 7.5 and 12.5k a year. The one exception to that is for large Irish businesses that breach the threshold for audit based on the Irish business's size, you may need a separate audit. And to breach those thresholds, ballpark, you need turnover of the Irish entity to be about 11 million euros, have gross assets of about 5.5 to 6 million euros, or have over 50 staff in the Irish parent company. Now, if you breach two of those three criteria, the UK entity will need a separate audit. And we do a lot of those for overseas businesses. So that's kind of a very quick shoot through of how we can help take some of the finance compliance burden away from you, when the key thing is to grasp post-Brexit the challenges of VAT, customs, etc., keeping your customers happy, and on the positive side, looking to use it as an opportunity to expand in the UK and maybe even into Europe. So next slide there, Jack. So we've run through very quickly, as HMRC have as well. So, we're offering a free 1-hour consultation, and we've agreed that with Enterprise Ireland for specific company inquiries. So you may have very bespoke specific inquiries, or you may be undecided what route to take, whether to just use a customs provider or set up an entity. These are big decisions, and sadly, in a way, they need to be made quite quickly, looking at the timeline. We're very happy to help on a one-to-one basis, and that offer is there and it's genuine. So yeah, please do contact either Ruth or myself. You see our email contact details there if you're undecided what route to take. But I suppose I'd stress you need to contact us soon because the clock's running. Over to you, Deirdre.
Thank you very much, Jerry, and good to be back on the webinar. I disappeared off air for a while there. There's been quite a number of questions coming in, so I might actually go to them because I'm just conscious of the hour that we had committed in people's times. Claire, are you still there?
I am. Can you hear me this time?
I can. So if I start with a question on, we have a company here who moves tooling between factories in the EU and the UK. And obviously they wouldn't be putting a value on the shipment. Will they, what is the position in relation to that?
So all of the special procedures around temporary admission and movement of sort of, as you say, I heard tooling, is that right? So it's machinery.
Yes, so it would be something to do with, you know, a piece of equipment involved in the manufacturing of products.
Or the duty can be suspended as per sort of the current special procedures, and we can drop a link across to give it information about that, because we've recently updated the guidance on special procedures on gov.uk.
Wonderful. Another question you can answer very quickly. Do you only need to apply for an Iori number if you're dealing with goods? What about software?
Not for software, so not for services. Iori is goods only.
Yeah. Another question, thanking you for the presentation and asking just for clarification whether a UK importer will need to pay import duty on products before being imported. If you want to deal with that.
So the UK importer, I mean, a lot of this depends on how the goods are being exported, imported. So that's the Incoterms that have been talked about here on the webinar as well. It will depend, but yes, if the UK importer is responsible for that import, they will be liable for the import duties. They can suspend that process for 6 months, as we've said. So if you are choosing, if someone is choosing to go down that staged customs option route, then that suspends the duty payable for 6 months from the date of import. But after that, duty is payable in the normal way.
Okay. And I realised I misread the question, so it was asking when. So if when is it liable? Is it before clearing customs or at a certain period of time after delivery?
It's after delivery. It's after import.
Yeah. Somebody's just asking whether they can have a recording as well as the slides. Yes, a recording is generated by this platform. It takes us a couple of days to be able to download and send on, but we'll send it on to all participants. There's a question right at the outset we had, again, I think more for you, Claire, and I've forgotten the term, but it's from a steel fabricator who imports steel and makes street furniture, other products, and they're asking how tariffs are handled around that, you know, where you're importing raw material and then you incorporate into a product and re-export it. I've forgotten the term for this.
Is that inward and outward processing relief? In which case, the link that I'll send you to the special procedures contains the information on that. And
really, that's a question that revenue can address, and we have your name, so I'll dig out the information on that and forward it on. Some questions here more relating to bank accounts. So I'm not sure if Margaret or Claire or indeed Jerry or Ruth can answer this. Is a bank account held in Northern Ireland sufficient, or does there have to be one set up in GB?
So I'll try and answer that one unless anyone else wants to jump in, but if this is in relation to the duty deferment account and the customs comprehensive guarantee, HMRC has a requirement that it meets one of the standards, and there is a list that lists out those standards. So there's a list of banks that it will accept. And again, we can pass you the link to that.
Very good. And I think the question may have come in during Ruth and Jerry's presentation. So anything to add on your side, Ruth or Jerry?
No, I think that link might be the most useful thing.
Very good. Claire, another one for you. Do you need a GB Iori number when importing goods from the UK to Ireland?
When exporting from the UK to Ireland, yeah?
Yeah, from exporting, and then obviously revenue picks up on the importing side.
So the best way to think of this is if you are going to be linking into any of the UK customs platforms or services, you will need a GB Iori, a UK Iori starting with GB.
Very good, thank you. Do you need a customs guarantee to use inward processing procedure in Ireland? I'm not sure if anyone can answer that one. Is that
I can't answer from the Irish side of things, but I can tell you that inward processing into the UK, you would need a comprehensive guarantee, yes.
Yeah. So can a non-taxable person with a UK VAT number reclaim UK VAT on imports? Our agent acts as a direct representative.
I believe they can, so, but I don't know if the guys there want to add anything.
No, they can. Yes, they've got a UK VAT registration.
Okay. And then there's
it's good we agreed on that one.
That's really
final question here, if we are supplying software systems from Ireland to the UK, will we have much of an impact? So currently we have a UK company set up anyway. So again, that's software. And this
services subject to reverse charges if the UK company was acquiring services from a non-EU country at the moment, they would have to account for it under the reverse charge.
Very good.
Anyway, so it's just treating, I guess, the UK as a third country now.
Thank you. Margaret, I'm not sure if I dropped out. Did you get a chance to mention to the audience about the industry days?
I did touch on it, but I can see it's up there for all to see. Yeah.
Absolutely. So maybe if I just conclude, as a reminder, we will send both the slides from this presentation and we'll send in due course the recording to all the participants. There was a webinar earlier in this week which people may find interesting. We had two of our wonderful Enterprise Ireland clients, Archway Products and EasyFix, talking about how they are addressing their UK customer needs. Your own, Margaret, your industry days is mentioned there. We don't have a date, but you are looking at that week of the 12th of October, I believe.
That's right. That's right, Deirdre. Yes, just to be absolutely finalised with our colleagues, but yeah, looking at the 12th.
And as soon as we have any final information on that, we'll certainly share it on our social media platforms.
Please do, yeah.
And a big thank you to Jerry and Ruth for offering that 1 hour free one-to-one support to all of our clients and those participating on this call. Jack, can you move on to the next slide, please? So just a quick reminder as well to all of the other supports that Enterprise Ireland offers that might be relevant. I can't urge you enough to look at the Prepare for Brexit website. There are all sorts of insights around customs and terminology, etc., around all of the matters discussed here available up there. And if you are still unsure about matters on customs, or you're worried about working capital and you'd like some support from an independent consultant who is an expert on financial side, or you would like to have some expert consultancy advice on your supplies, supply chain, and strategic sourcing, we have a panel of consultants who can advise you for free. And to avail of that, you click on the Act On initiative on the Prepare for Brexit website. We also have the Be Prepared grant, which provides grant support for people who are just trying to prepare and finalise their plans. And if you move on, Jack, to the final slide, there is both customs training in the Customs Insight course, and there is a grant support available for companies who are taking on, who need to take on additional staff to deal with customs. So a lot of information there, but what I would really like to do at the end of this is to thank all of our wonderful panelists. I'd also like to thank both the UK Embassy in Dublin and the Irish Embassy in London, who helped connect us to Claire and to Margaret, to our Brexit unit in Dublin, who provides such fantastic support. And finally, to Jack, who is one of our newest members of the team and took over wonderfully as we all started dropping in and out with connections, with me being the worst culprit. Thank you all very much for joining. And if you have any questions, feel free to come back to myself, to Jerry, to Ruth, or indeed to Jack. Jack's email is there, and we'll aim to answer you as best we can. Thank you for joining.